Thursday, July 8th, 2021, Monaco 64, home of alternative economics and contrarian views. So I think the Treasury market yields are giving a warning sign. I haven't seen yields drop as quickly as they are since last year when the stock market started crashing towards the end of February and then bottomed towards the end of March. It took just a month for the markets to drop over 30%. Am I concerned? Not really, because I'm mostly outside the system. Yes, I have mining shares, but they've already been doing pretty badly. If they go down a little more, I might even buy some more, because I don't expect the central bankers to just let everything implode. They will come out again. They'll have an excuse. Maybe it's to do with Cyber Polygon, which is starting tomorrow, as we some of us know. As for Cyber Polygon, I recommend a video by Bjorn Andreas Bo Hansen. He's been on the channel. He's a Norwegian YouTuber. He's an author as well about the Viking era. And he spoke about cyber attacks intensifying yesterday. I'll put a link to his video below in the description and up in the cards. As per other interesting videos I've seen recently, I highly recommend Townsend's The History of Money in America. He made this video yesterday. Another great video, I think. He usually doesn't talk that much about money, but he talks about history of the colonies in the 18th century. That's what Townsend's does. And one thing he said about money is that it's not clear-cut. It's very complicated. It was then during colonial times, and it is still now, I would say. So I'll do the same for this video. I'll put it down in the description and up in the cards. Before we look at this warning that I think I'm seeing here with Treasury yields, how they're dropping so quickly, and it reminds me of February, March last year when the same thing happened to yields. Why is that a bad sign when it's happening so quickly like that? Well, it means that the smart money thinks there's trouble in the financial system, and they go to treasuries because they're still considered a safe haven asset. I'm gonna stay with my silver and gold, and just wanted to show you some of the coins I got the other day from the viewers. One of them is a really beautiful coin. It's a Belgian franc silver coin from 1873. And it says, "L'union fait la force," which means unity makes strength in French. And it's got Leopold II, Roi de Belge, King of the Belgians. So here you go. It's a beautiful coin. There's the Leopold. And then the other one I got from another viewer was a 1 ounce Republic of Armenia silver coin, a Noah's Ark coin, which is appropriate, I would say, in these biblical times. There you go, Noah's Ark, and Republic of Armenia, 1 ounce silver. And I got a little bar as well, a 1 ounce silver bar, which was really nice as well. It's a silver shield, one troy ounce, and it says Den of Thieves. That's the Mariner Eccles building. That's where the Federal Reserve Board or Federal Reserve System is headquartered in Washington, D.C. It also says not federal, no reserves. I agree with that. So now to the Treasury market, to yields dropping very quickly. I spoke about that yesterday. I've been saying that something doesn't seem right. And I've woken up this morning. I checked the 10-year yield. We're down again. We're almost down to like 125. And a few days ago, we were almost at we were around 150 last week. So it's dropped almost 25 basis points with no particular headlines, no particular really bad news about the economy or about financial institutions. I guess one thing that must be nagging the smart money is this repo situation as well. But there might be something that we don't know about that will come out once things unravel, if they do unravel, I would say. But just wanted to show you this chart here. And it's not normal to see the 10-year yield drop that much in less than a week. I've been in these markets for a long time. Even when yields were at like 5% or 6%, a drop of 25 basis points was considered quite extreme, or a rise for that matter. But when yields are like below 2%, a 25 basis points drop is very significant. So as you can see here, it looks very similar to around the period towards the end of February, as you can see here on this chart, starting to drop here. And then it culminated with a big drop towards 32 basis points or thereabouts in the beginning of March. And then it spiked. And then we had loads of volatility as well. We went like up 1% in a matter of 10 days to like pretty much where we're now at 128. So it was a really crazy time. We haven't got the volatility yet, but the drop is worrying. The drop tells me that maybe financial institutions don't want to keep their money or lend their money in the short term to other financial institutions. That may be why the reverse repo is exploding in terms of size, and people are dealing with the Fed instead of dealing with each other, because the repo market is supposed to be a market amongst financial institutions. So if they lose trust in each other, they won't deal with each other. So they're dealing with the Fed. So that's another thing that we need to consider. So look at how the yield's starting to drop here. So that's concerning. That's when the stock market, and we'll look at the stock market now. I'll look at the Dow, and you can see here at the time we had the same kind of situation. We were making all-time highs here at the beginning of last year. And then on the 20th of February, the market started keeling over, and it was probably the quickest and deepest crash in history. It took about a month, and the stock market dropped like almost 40%. And afterwards, of course, the central banks, governments came out and turned on the tap of stimulus, massive tap. What they'll do this time, I don't know. What will cause this? Could it be a cyber event? Maybe. Will it happen tomorrow when Cyber Polygon meets? Maybe, but Event 201 happened in October of 2019, and the crisis last year started around February, March. So it might take that long. It might be in a few weeks. Who knows? We'll have to keep an eye on things, and I think we still got time to accumulate physical gold and silver, but I think the door is shutting very quickly. So with that, let's look at where the markets are this morning, because I wouldn't be warning you if I thought the markets were stable, and they're not this morning. It's 8:50 a.m. London time. We've got spot gold at 1806, up $3. We've been as low as 1796 and as high as 1807. So gold is holding fairly well here around 1800. Last year, when we had the big crash and the big drop in yields, gold dropped from I think 1750 to around 1450. Silver dropped to an 11 handle. Do I expect that to happen this time around if we do see a major meltdown in the markets? Anything's possible, but it didn't worry me last year when that was happening. I was still holding on to my metals. If anything, on the day that they bottomed, the day that silver got to an 11 handle, I was able to buy a few silver coins from Gold Investments. They had some, and the price was around 17 pounds. Now it costs over 30 pounds to buy them. So I think, if anything, I'd be trying to add on if we have a meltdown. How's silver doing? Well, silver's trading at 26. Silver has been underperforming in the last 24 hours. It's down 12 cents or 0.5%. But when you see where the stock market is, you realize that gold and silver are actually performing relatively well. Range in silver has been 26.20 to 25.85. The Dow futures down 400 points, just over 1%. The NASDAQ is down 130 points, just under 1%. S&P is down 41 points, 1%. And 1% is not that much, but when the markets are so elevated in nominal terms, 2 or 3%, which we've seen in the past, markets drop in a day, will make investors and the public scared because it will be a big number. I mean, 2.5% in the Dow, we're getting near 1,000-point drop. And today, all the three major indices are down. Recently, we had one down and the NASDAQ up and vice versa. Today, all of them are down. So that's another bad signal there. Currencies, we got sterling down 0.25% at 137.65. The euro is relatively stable. It's up versus the dollar 0.125% at 118.04. The dollar yen is down 0.75%. The dollar is versus the yen at 109.82. Dollar's up slightly versus the yuan, 0.25%, 648.82. What about the other currencies we're looking at here? The Aussie dollar is down 0.75% at 74.26. So yes, commodities, general commodities are getting hit hard, and they might still have a leg down if we see a meltdown. But I'm still convinced that we're gonna see medium to longer term moves higher. The dollar is up 0.2% against the Canadian dollar at 125.61. So let's see the general commodities here. WTI crude has dropped quite a bit of late. There's some news about OPEC yesterday, I think. Right now, we're down 1%. Just around $71 WTI. High-grade copper is down 1.5% at 425.80. And just to look at the 10-year yield where we are this morning. You saw the chart, of course, earlier where what the 10-year is doing. We're down about 4 basis points at 128. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.